Well, folks, I have witnessed over the past 24 to 48 hours a lot of bears in the stock market celebrating. A lot of them celebrating. WW3, they're talking about that was starting, and they're talking about market's going to tank Monday. It's going to be a bloodbath. The bulls are finally going to get it. And what do you know? Futures have opened, and the Dow is green, the S&P 500 is green, and the NASDAQ is green. So the bears and all that celebrating on social media, I don't know where that 1,000 point, 2,000 point drop on the Dow is at. That a lot of people were predicting, but so far it doesn't quite look like that. Okay, that's pretty darn interesting. Alrighty, folks, got 3 videos I want to react to here. First one up here is Mr. Tom Lee. Oh yeah, everybody's favorite bull, Tom Lee, speaking about where he expects the Fed to go next, where he expects the market to go, those sorts of things. So I want to react to that one. Then I want to react to this one here. Market bulls have gotten ahead of themselves. Okay, so a little bit of a bearish video there. Looking forward to getting to that one. And then last up here, I want to talk about Elon Musk. Obviously, robo-taxis. I want to talk about kind of what I've been experiencing with self-driving. I've talked to a lot of other people over this weekend that also have Teslas and have the self-driving features and kind of what their opinions are. Talked to a lot of Tesla customers that aren't shareholders and kind of want to share some thoughts and opinions on all that. Hope you guys enjoyed today's video. Appreciate y'all joining me. Thanks for being here. Thank you for smashing that thumbs up button. And thank you for being subscribed here to the channel, folks. We are at a new all-time high subscribers in the history of the channel. We are 8 hours away. 8 hours away from the 1-day massive sale for my highest Patreon tier. Get access to my #1 course, get access to the moves I'm making each week, and access to that Patreon Discord chat. 8 hours away, folks. Pin comment down there if you want to enter in so you can get access to that deal as soon as it drops 8 hours from now, okay? So, yeah, pinned comment down there. Alrighty, guys, let's get into this.
It's temporary, a temporary moment of pain and a buy the dip opportunity. He joins me now, post 9, to make that case. Good to see you again. I'm glad you're here in person, too. So you don't think that much changed this week?
I think the narrative got muddled because that CPI report was a disappointment, but it was driven by what we'd call stubborn components, shelter, auto insurance. The median core CPI component now has only 1.7% year-over-year inflation. Inflation is normalizing. It's just not evident in the total picture.
So the PCE in a couple of weeks is going to be more favorable, we think, than these.
I'm about sick and tired of this, okay? I'm about sick and tired of this. I've got to push back right now against all the bulls, okay? Because every time there's always a damn excuse. Every time, the numbers are only high because of this number, that number. It's always an excuse. We just have to admit it. Inflation is still an issue. It is not defeated. We can keep making up excuses. Oh, it's only auto insurance. And we're always just making up excuses. And we've been doing that for like 2 years now. Okay? We just have to admit inflation is still an issue. We have not defeated inflation. We're in a lot better spot than we were, let's say, a year or 2 years ago. But the bottom line is this is not a slayed dragon yet. Okay? And so I get sick of the excuses. It's always an excuse. And then if next month comes in not that great, it's going to be some other excuse. And next month, it's like, holy smokes.
Inflation reads. And I know what everybody says about it being the Fed's favored measure on where inflation is. But are you entertaining the idea that this is not going to be as easy as you once thought it was going to be for this last mile, and therefore the market can't do what you once thought it could?
I'd say that's really the narrative disruption this week, because now the Fed has 3 inflation reports that it can't argue against that are a little hotter than expected.
And the bulls can't really explain them away either, can they?
That's right. So what we would need to see is April and May CPI improvements, which is in the future, and then keeps the Fed from standing in the way of the economy. What we don't want is a Fed that wants to further slow the economy, which is rate hikes. And I think if they just do even one hike this year, it's still actually a good environment for stocks.
One cut, you mean?
Sorry, one cut.
Yeah, let's be clear. See, that's a Freudian slip. Because the greatest fear of all is that they're going to have to hike again, however remote that possibility seems today. And even if you put into the soup all the Fed commentary that we've gotten of late, just seems to be push off rather than push up.
That's right. And I think it's, at the end of the day, even this CPI does look like it's somewhat sticky. PCE, as you pointed out, is more cooperative than PPI is, and measures like Truflation show inflation much softer, inflation expectations much lower. So I think at some point we could also just ask, is CPI a bit aberrant?
What about the valuations of the market? how do you counter the argument that they're just way too stretched? Multiples are just way too rich, given what now is likely to be the case of cuts later on?
I think when someone looks at 20 years of history, that's the argument they'll make. If they look at 90 years of PE multiples versus interest rates, when the 10 years between 4 and 5%, which is a pretty big range, the median PE is 20 times. So we're not even at a median PE multiple of what's existed whenever the 10 years been in this range. So, and then if you look at the median stock, it's actually at 16 times. I'd say that there's upside to earnings. I think multiples can expand. I don't think 5,200 is the ceiling for stocks this year.
What feels like the right ceiling now?
I know this is going to be tough for investors to embrace it, but I think something like 56, 5,700 is probably where the S&P exits the year, maybe even higher.
Much more backloaded into that than you once thought?
I think it's still backloaded because we'll have the cuts behind us and we'll have visibility into 2025 earnings, which probably could be 270, maybe 280 next year.
Well, when you say we'll have the cuts behind us, are you so sure? Right? So let's just take June off the table. For argument's sake, no June.
Yeah.
Hold on. Let me push back for just a moment here, okay? I do not like it when people assume valuation's already pretty dang high, okay? If you're looking at a trailing 12-month P, forward P on the stock market, we're at very high ranges compared to where the market historically trades at, okay? So I do not like it if you're trying to hope that valuation is going to push up even more. The only way stocks should really go up considerably from here is by the strongest companies that matter the most to the market, beating their earnings, right? Exceeding their guidance, and then we can push the market up further and further. So let's say the Metas and Nvidias and the Apples and the Microsofts and the Google McDougals and all these guys come in. They're going to report their earnings over this next 3-4 weeks, right? Let's say they all come in, knock it out of the ballpark, and they beat their numbers, they beat their guidance. Then, boom, 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 we can keep heading up, right? Because then we're not counting on getting a valuation push, right? Multiples expanding. Then we're just counting on earnings coming in. I think anything else is kind of hoping for the wrong things. Let's hope the P expands. We're not at a low P. If we were trading at a 12 P, then I'd say, okay, yeah, we got plenty of expansion here. We'll be at a 20 before we're in a normal market, but not where we're at right now.
You think the first one's in July?
Or it could be September. But
that's why I asked you if the move in the market that you just suggested is backloaded. Because you're not going to get a big move until you see the first cut. At this point, now there's a lot of disbelief in the market.
That's right. And Scott, one thing to keep in mind is the probability of a June cut has been reduced, but it can come back if we have a good April and May CPI, because then it's going to put back into focus what is the trend in CPI. It does feel stubborn when you look at January, February, March.
All right, next one up here. Market bulls have gotten ahead of themselves. And one last thing I'll just push back on. I think at this point we've got to stop trying to predict when the Fed's going to cut. And the reason being is it's just everybody's been wrong. I don't know anybody that's been right about the whole Fed. It's like you think, they're going to probably cut, and then they don't, and then they don't. And so at this point, I think it's a lost cause. At this point, it's a lost cause to even try to predict when the Fed's going to cut. Because, we've all been wrong. There hasn't been one person that's been right in regards to this whole situation. So it's kind of a fool's game almost at this point in time, in my opinion, in trying to predict these cuts. They'll come when they come, and they're likely going to come when we're getting substantial economic weakness. Next one up here, market bulls have gotten ahead of themselves.
CNBC contributor Avery Sheffield, co-founder and CIO of Vantage Rock. She and our senior markets commentator Mike Santoli are here with me on set. It's good to have you with us today. Avery, I begin with you. Did anything meaningful change?
Let me push back against this sentiment that market bulls have gotten ahead of themselves. How have market bulls? Is there just some crazy flood of money coming out of treasuries and savings and going into the stock market? The answer is no. Have we seen something happen in the market where people are going crazy on margin and margin out a ton of money, and we got a very high, percentage of the S&P 500 that's margined out right now or something like that? No, those numbers aren't high either. So this kind of sentiment about market bulls are out of control or something like that, we're not seeing the activity in terms of money flows and those sorts of things that you would usually see. Have small caps been running? No. Small caps, if you're talking about the stock market's out of control, that's usually a situation where the Russell's going insane, speculative stocks are going insane. That's not what we have at all. Speculation is dead in this market. Anything speculative has sucked, just to be quite frank. The only companies that have really been performing well are the companies that really got it like that. They got that great top line and bottom line.
This week for the bulls?
I think the bulls began to recognize that, you can't have your cake and eat it too, right? So the market has been looking for lower unemployment, lower costs, lower rates, lower inflation, and at the same time, looking for growth enabled by higher wages, higher prices, and higher government spending. And the reality is the last part of that's coming to reality and or continuing, and that means inflation's higher for longer, and it kind of makes it harder to have these low rates continue to have low rates come soon enough to stimulate the economy for the next leg up.
Should we be less bullish than we were? Did the game change in some respects this week because of the inflation reads that we got?
Yes. Well, I mean, I think that the bulls have gotten ahead of themselves, right? Valuations have been expanding. If year over year valuations are up 25%, while earnings estimates are actually about flat. And even over the past several months, you've continued to have valuation expansion with going from the expectation of rate cuts to nearly 6 to under 2.
This is poor analysis. That's poor analysis. Let me see if you guys can spot this. This is poor analysis 101.
That's right. Valuations have been expanding. If year over year valuations are up 25%, while earnings estimates are actually about flat.
Earnings estimates, okay. So one way, let me explain to you guys the high-level stuff here on how she just screwed up massively, okay? She just compared the entire market to, we've seen the market do so well, right? We've seen valuations expand. Where we've actually seen valuations expand, where have we actually seen the performance of the market, the alpha in the market? It's been with the highest tier stocks, right? The Metas and Nvidias and those sorts of companies. Well, if you want to go ahead and split the Mag 7 in those very top tier stocks, let's call it the top 10, 20 stocks of the S&P 500 that are really the best performers, split those off from the market, and what you'll find is valuations are very low in terms of trailing 12-month PE, forward PE for the rest of stocks, right? So it's really the top of the market that's been helping out everything, and that's where you're getting that alpha, that performance. And if you look at the weaker stocks, they're not performing that great. Look at the equal weight S&P 500 versus, let's say, the Mag 7. Over the past year, over the past 18 months. And you're going to see an insane divergence, okay? So her analysis there is just not good analysis. You got to go much more nitty gritty than that to get more of a full picture. Her analysis there, in my personal opinion, it's a flawed way of looking at it, man. It's a very flawed way of looking at it.
And even over the past several months, you've continued to have valuation expansion with going from the expectation of rate cuts to nearly 6 to under 2. So, something needs to give. And
the main stocks you've seen valuation expansion are the same exact companies that are not just coming in line with earnings expectations, that are blowing them out of the water, right?
I think it's the markets that are giving, and then you add on to that, increased geopolitical risks, and it's a tougher environment.
Okay, Bryn, you want to tell me what the takeaway is thus far for what's been a pretty turbulent week?
Yeah, I mean, I think that as the week started...
Oh, CarMax. Do you see the way that stock's down? Let me tell you guys. So, I was in Arizona this weekend, right? I went down was on the west side and going by all these car dealerships, right? And I mean, there's everybody on this road. There's Ford, there's Chevy, there's Volkswagen, there's Audi, there's Mercedes. Everybody's on this Jeep, everybody, Dodge. They're all on this particular street, right? I'm going by those dealerships, and you know what I see? Those lots are jam-packed. Like, I have not seen them, maybe ever, but in probably a long time. Like, let's call it 5-10 years. I have not seen, like, literally auto dealership lots packed like that in terms of just ridiculous amounts of inventory. Then coming home, driving back here in Vegas, looking off the 215 at those dealerships, all those dealerships lined up there off 215, loaded with inventory. I mean, those lots are freaking maxed out. They got those vehicles like a can of sardines, row after row after row. There might be some issues coming, okay? It might be some issues with some of these auto dealerships, with some of these automakers that haven't really got hit yet in terms of the volumes, really the way you would think Tesla, see, this is the difference between Tesla and the rest of these guys. The rest of these automakers, they sell the dealership network, right? So they've kind of flooded inventory out there, and I think it's kind of goosed their numbers to make them look like they're doing better than what they're really doing in reality. While Tesla's selling direct to consumer, it's a whole different business model. So don't be surprised if the traditional automakers report absolutely horrible numbers for the rest of this year. Don't be surprised. Now, am I going to go out there and short them? Might be tempting. I probably won't. It is tempting to buy some puts, but I probably won't because they're already such low valuation names. It's like a lot of times it just doesn't make sense. But don't be surprised if for the rest of this year, those companies report bad numbers.
Ending. I mean, I think it's definitely going to be risk off. You know, we don't want to see Iran and Israel get into any type of skirmish. And I think that's also, I mean, gold's down a little bit today, but gold's had a huge run. And so I think people are putting their hedges on. And I think, in addition, it's like we started the year, Scott, with 6 rate cuts and an AI euphoria. I think AI is getting a little bit tired consolidating, and we're going to now have maybe 1 cut in December or what have you. And so I just think the market's repricing. But I think today specifically is more geopolitical as well as yields going higher.
These are good points that are being made, Mike, and that if you were really bullish months ago on the idea that you're going to get rate cuts, and that was going to be a principal part of the story, how can you possibly be as bullish today on the idea you're going to get fewer?
It's more complicated. We were operating on the premise that we might not have to make painful trade-offs and give up the idea of the Fed easing into record high stock market, 3% GDP economies. That's something I've been saying for a while. I do look at it a little bit more about the atmospheric conditions that preceded this moment, which is the market straight up for 5 months, no 2% pullback in the S&P 500, a very tight clustering of the consensus around the soft or no landing, and yet we're going to have the Fed cut and yields are going to stay tame and all of that. So I think we've gotten a pretty welcome shakeup of that opinion. And so if you had more, you have to have less conviction now in any of those views than you did 2 weeks ago. That being said, I'm not going to get too overexcited about a 0.02 of a percentage point, upside in CPI month over month that all of a sudden tears up the entire premise of how we got here. PCE is going to be under 3% annualized coming up in 2 weeks. And you're going to be able to kind of make both cases for a little while here, that the economy's fine. Earnings are going to be better than expected in the first quarter, even if they're just getting back to what we thought they were going to be 3 months ago. And so we're less than 3% from the highs. We had our first 50-day moving average test in the S&P, again, in 5 months. That was a really long stretch. So I think you've lost the momentum players. That's broken. I think that you've lost the valuation doesn't matter because we're going to get rate cuts camp. And what you have to do is have a fresh eyes on valuation relative to earnings and also the big secular themes. Because every time we think this market is getting a macro gut check, somebody says AI and three mega caps go flying. And all of a sudden we think it's back to happy days again.
So in terms of the whole is AI played out, tired, those sorts of sentiment. Earnings. If these companies come in, the Palantirs, the NVIDIAs, the AMDs, and report some pretty insane numbers, right? Great earnings that beat expectations, great guidance that beat expectations, great commentary, you'll find out that it has not played out at all, right? Now, if they come in and disappoint, sure, then it's really a played out story. But if they come in, knock it out of the ballpark, past quarter, future quarter, great conference calls, you'll find out very quickly, this is not a played out story yet. And next thing you know, NVIDIA will be 1,000 plus. And people will be paying $1,200 for that stock quickly. Palantir will be 25 plus, right? So, yeah. Next one up here, Elon Musk is trying to highlight the value of robotaxis could bring. This should be interesting.
Around its self-driving technology just months ahead of its robotaxi launch, which Musk says is coming on August 8th. In the meantime, Tesla co-founder and former CEO Martin Eberhard told investors at an HSBC summit in Hong Kong overnight that he is amazed, in his words, that Tesla gets away with rolling out autonomous driving given its history of fatal accidents. Again, those were in his words on this. The stock was up about 5% just on the idea that robo-taxis are coming in August, and that's something that we're going to be talking about right now. Joining us to discuss this is Tom Narayan, who is Global Autos Analyst at RBC Capital Markets. Tom, thanks for coming in today. Sure. So this was pretty big news as far as the market was concerned. The idea of these robo-taxis actually having a date.
Yeah, definitely. I think it was a surprise, but I don't think it was a surprise for investors who are long Tesla stock, or certainly sell-side analysts who have buy ratings on it. It's about 60% of my valuation, and has been for over a year, is robo-taxis, or really it's autonomy. So that includes FSD to some extent. Right. So yeah, I don't think it was totally
full self-driving for those uninitiated on the FSD.
Right. It's like a level 2 plus assisted driving, and then robo-taxi is completely level 4, drives you completely.
The idea that it's coming in August, does that hinge on that valuation too? Or is this something that you could be a little flexible with that timeline? Because that's been the knock before, that timelines are laid out and then not met. If that timeline's not met, do you still think the same thing about your valuation call?
Yeah, I do. I mean, my valuation's based on a 2040 year revenue target, and then I discount that back and I apply a multiple there. Similar to FSD, which is like a 2030, 2035. I mean, if it's August 8th, 2024, if it's next year, I mean, robo-taxis aren't going to be mainstream for a long while.
Right.
I do see why he's doing it, where, I mean, he's trying to highlight the value of that this could bring. It's huge, right?
But when do you think it could actually roll out on the streets?
We have a robo-taxi service in San Francisco with Cruise and Waymo, right? I don't think it's going to be in some big scale anytime soon.
Right, but the difference, I'm curious if you agree with this. There is a view among those in the sort of engineering community that the reason why the Waymo and Cruise products work is because they use LiDAR right now. You roll your eyes, but I'm just saying this is the whole thing. LiDAR, by the way, is effectively like a laser that's pointed at different places, and that gives you feedback about what's actually around you. Elon has decided he wants to do this solely with cameras and without the radar. It's just a completely different approach. And as a result, there are some people who have a view that that is not fully ready for full prime time, full self-driving. Right. And that's the whole question. And so my question to you is, do you believe that the robo-taxi version of the Tesla is running solely on cameras, or somehow is a shift in strategy?
I could envision him pushing cameras initially. That's what FSD is based on. Could he capitulate on that and pivot towards using LiDAR eventually? Sure. Right. I mean, he's changed his mind before on things.
That's a longer delay, though, just in terms of getting things out on the street. If you're going
I mean, it could depend on where we have this product. Is it geofenced? What cities? Where is it? Initially. But at mass scale, we've heard Mobileye is a company that has a product that's building with VW, the ID Buzz, that uses LiDAR. So, I mean, we'll see. It adds a layer of redundancy. Theoretically, it's not 100% necessary. But yeah, it depends. You'll have to re-engineer cities to make this work in the future. You can't drive.
Re-engineer cities how?
Well, like, imagine a robotaxi in the Champs-Élysées right now, right? The Arc de Triomphe. It's impossible. So some cities, I mean, they're already doing that in New York, banning private cars in certain streets. You have it on Oxford Street in London, where only certain types of vehicles, some pedestrian areas are separated. Cities are going to change dramatically in the next several years or decades. Regulators are going to mandate that we use these things because they save lives.
So, yeah, he does bring out good points there. One of the issues I've seen with the self-driving testing it over the weekend was in construction areas, in terms of like people put up temporary construction signs, right? Like, for instance, I'll give you a specific example. Usually you could take a left at this light, but there was a specific sign up the construction crews put that you couldn't take a left there, right? Well, the Tesla didn't pay any attention to that sign. It just still took that left, and it was like, I'm going, okay? So those are situations that maybe can be fixed over time, but sometimes those are like smaller signs that aren't usually there. So then the car's going to have to tell, is that like a real sign? Is that not? And kind of, differentiate that. So that's kind of another step. And that's where we talk about this last 1% to 2% of driving, which is these weird situations you get in, right? Where something has to be done and the car wants to do something else, right? So now I was speaking to a couple other Tesla owners over the weekend who aren't not Tesla shareholders, they're just Tesla owners. And they were both very impressed with the latest FSD rollout. Both of them are really happy with the progress that's been made there, right? Neither one of them said it was perfect, as it's not, right? But it's clear as day, like people are very impressed by the latest Tesla FSD. And I just wonder, with how rapidly it's getting better, like where are things going to be 6 months from now, a year from now, when it comes to FSD, if things are getting this much better, this rapidly. So that's pretty exciting, and definitely makes you feel a lot better about timeline and in terms of getting robotaxis out there, and in terms of FSD being, nearly a complete project.
There have been problems along the way, though. And
even though technically FSD is never going to be a complete project, right? Because it's not like you get done and then you're like, that's as good as it's ever going to be. No, Tesla's going to keep making it more perfected.
The former CEO and the co-founder of Tesla pointed out, look, there's surprises. It's not just Tesla that's had the issues with this. You've got GM kind of rolling out their taxis with safety drivers now in it because of accidents they've run into, too. Grand scale, is it going to be safer eventually? Probably. You have people who cause accidents all the time, but the liability factor is a huge one that is going to weigh on the manufacturers of all these cars.
Sure, and that's been the real overhang of the difficulty. BMW always says the moment there's a headline that says BMW kills human, we're finished, right? But the reality is it'll save 2 million lives a year.
Right,
100 million
of being the one that kills somebody. I mean, there's still the legal framework you have to live within, and the outrage of the family that loses someone.
But what about the outrage of the 2 other million people who die, right?
But let me ask you this. I've asked Elon this question specifically and personally, which is, what is the politically palatable number in your mind in America of people who are going to die because the computer effectively is going to malfunction? That is actually the fundamental question. So right now, if you believe that 40,000 people die in a vehicle every single year in America, if I told you that 5,000 people were going to die every year in America, but a computer was going to do it because it malfunctioned, would you say that's a good outcome? Would you say that's acceptable to you? I don't know. That's why I'm saying it's not so clear. If you got the number from 30 to 20, I don't think that would be politically palatable. Right. So if you got it from 30 to 200, that might be politically palatable.
We know that 94% of accidents are caused by human error, right? So that number won't go from 30 to 5,000. It'll be a lot smaller. We have to remember other industries that's happened. Aviation, there were tons of crashes early on. Trains. And over time, those reduce significantly.
Spockian view,
right,
Dr. Spock view of all of this. But logic doesn't always prevail when you are talking about, and when liability comes and there are deep pockets of a manufacturer behind it, that's what the lawyers will go after. And for the family that loses it, it's, I understand the Dr. Spock mentality, but that's not how things play out in reality.
It'll be difficult early on, right?
Yeah.
But we'll get there eventually. Plus, look at China. They're moving full steam ahead with this, right? That's a Spockian view, and it works.
It is, and that's the way when you have centralized planning government, that can kind of roll into that.
We'll get there.
So it was interesting. I could have easily been in an accident last week. I was driving. The car was not driving in this situation, but essentially I needed to take a left. I was parked at this light. Okay, the light was red. I was eventually going to get a green arrow, and I'm going this way, right? Well, this is like one of those setback type situations where I'm like back here. It has you kind of sit back here, and then there's cars right here, cars right here. So I don't have a clear line of sight over here. So my light turns green for the arrow, and I was like, I'm just going to give it a second or two before I go. And the reason being is I was afraid somebody might go this way and take a left on red. Sure enough, I wait my second or two. I start proceeding, and somebody freaking took it. And I stopped the car, and I'm just like, if I had went right away, as soon as that light turned green, I would have got, boom, nailed by that person because they freaking ran a red. So it's just like, those are those other little situations that, most human drivers aren't going to do. And let's be honest, if that lady was in, she's on her phone and everything, if that lady is in a robotaxi, it never takes that left on red. If anything, these Teslas are go drive way safer than a human does, right? It wouldn't do something stupid like that. And so that wouldn't have to be an issue. But because humans do stupid stuff and they run red lights and do stuff like that, I have to drive extra careful just so my kids don't get hit. And it's just like, those are those crazy little situations. So, all right, guys, appreciate you joining me. Thanks so much for being here. As always, we are now, down to 7 hours? 8 hours and 4 minutes away from the huge deal. Pin comment down there to get access to that. It's a 1 day, 24-hour sale, baby. And then it's gone, long gone. Much love and have a great day.